Boom, baby, we're live. We've all lost all our money. It's over. The bull market's over, guys.
Dumpster fire.
It's all good. It's all over. Game over, man. Game over.
Back to working at Walmart.
Back to put the fries in the bag, James.
Yeah.
It's wow. The market is in quite chaos, disarray, disbelief. This is just, I did not see this coming whatsoever. But we're going to talk about that today. Guys, welcome aboard to Tokyo Crypto Show Season 2. How's everybody doing?
Pretty freaking fantastic.
Yeah.
End of year, Christmas parties nonstop, good times. Life's good.
Good stuff.
I'm seeing my home currency is just absolutely crashing, so I'm just making, because I've got everything in US dollars, I'm just making beautiful returns by doing absolutely nothing. It's wonderful. Yeah.
You can just talk there. It's fine. Well, I don't think just try. It's fine. Steve's in the suite with me here. He's over on the fucking.
Oh,
yeah, nice.
Oh.
There he is, right there. I'll keep Steve as a background character there.
Background NPC.
Yeah.
James, we need to get a bigger mic. I think like by mid next year, we're just going to have like the top of your hat sticking through it.
Oh.
Shrink it every week.
Yeah. So fucking hell. Alex, what do you take of all this shit? Market's crashing. It's a bull run over. What's going on?
It can't be. I mean, Bitcoin's $100,000, baby. Like, life is good. I've got the charts here for Ethereum and Solana. I think they're definitely worth taking a look at. In the
what about, are you going to do Bitcoin too?
Oh, yeah, got Bitcoin as well. But if you sit there and just zoom out, even just zooming out this last like 60-day cycle, it is still looking absolutely beautiful. Nothing to be.
You're not worried at all.
Not one bit.
Really?
I would be keen to be accumulating more at this time if I hadn't already accumulated, months and months and months ago. So, yeah, life's good. I mean, a few people have been looking at altcoins and things, and they've all been becoming a lot more hard to find the winners. I think a couple of months ago, even just a month ago, when Solana was at all-time highs, it was like any meme coin. You could just jump in, and people were going crazy. Whereas now you got to kind of really dig through and search, because a lot of them just so that sort of excitement, that mania, it's just not there at the moment. But Bitcoin is consistently over $100,000. Even as of last week, it just kept on making a new high every single day, and no one seemed to care, basically, which I think is a really good sign. How could we be at the top if no one gives a shit? Also, we said months ago, whereas we're still expecting 2025, second half of the year, probably Q4, to be a top. So, like, we are nowhere near any sort of top. I'll talk about in a little bit the weekly cycle, the 26 sort of 6-monthly patterns that Bitcoin does, because we're sort of coming to an important time soon. But like, we're nowhere near the final top. I mean, anything could happen, but that would be my 99.9% scenario. Is it's just going to continue going up. So,
Lord Venom, $9.99 super chat, real quick. Thoughts on Pudgy Penguins? Keep the great streams coming. It's just another trend that's going to crash to zero.
If it's hot, if it's hot and you own it, get out. Once you figure out you made enough money, don't hold on to it. Don't be the last bag holder.
At least take the principal out, at least, because most people, even with all the meme mania, still did not make any money. Most people do not make any money, even when their multiples up. On paper, until you sell it, you got nothing.
Yeah, if you have like 10x, take half of it out, or take 2/3 of it out, and let 1/3 or 1/2 write it for free.
Yeah, it's a really good problem to have.
Yeah.
So, embrace.
Problem indeed. So, okay, well, because look, here's the thing: the markets are down, and people want to know why. So today's episode, we need to explain what's happening for the people watching at home. My general thesis is we're just kind of getting started. This is just kind of not out of the norm for all the cryptos to make all-time highs, mainly Solana and Bitcoin. Excuse me. And then, yeah, now we're just having like a healthy retracement. Some meme coins are down 75% plus, 80% plus. But then you have stuff like Fart Coin, which is ripping ass, and so we have just so much different things going on. So we're going to try to add some clarity. I'll let you take the floor there, Alex, whenever you're ready.
Yeah, beautiful. So new computer. So let's just see if this works. It looks like it is. Amazing. Chuck me up. Let's go. Bitcoin. So here is something I put together a little bit earlier. We've got this is sort of the 60-day cycle starting. Day one. I hope we can all see the mouse and everything. 4th of November. So here we are. We have gone, if we go from the bottom to top, we have done a lovely, 61.5% in 45 days, month and a half. So huge, love it. So anyone saying, "Oh my God, like we're in dire straits," like we're still over $100,000. We are. The 60-day cycle itself has been operating literally perfectly. We've got day one, and so we would expect a high about day 15, plus or minus sort of 3 to 5 days. We have a high on day 18. That remains the high. We get a day 31 low. Beautiful. You can see at the bottom here, lovely volume kicking in. So that really, and then a high close. Well, not a high close, but definitely it's flown back up. Very positive. Beautiful. And then we would expect a high about day 45, plus or minus a couple of days. And here we have a high at day 43. Beautiful. So at the next step, we would generally expect the price now to come down. And we can see we had a big reversal candle just on the 19th. I think Steve is going to mention some stuff about the traditional stock market, the Fed lowering rates and things. So that's stuff to jump in, but let's just keep it on Bitcoin for now. So we have this lovely reversal. Now, in a very bullish case, the 60-day cycles can extend well beyond 60 days to sort of 70 odd. So we could have another push up. That would obviously be lovely to see. In general, if it all just keeps playing out as normal, we've had, a right translated cycle, very bullish. We would expect it to come down. Who knows how far? Probably not 30%. So I would doubt that we get all the way back down to 73. But who knows? We might thread around here. We have this sort of series of higher lows here. So we might be anywhere from sort of $92,000 to $100,000 in that range. Life's pretty good. So I was expecting, or rather I am expecting a weekly cycle top. So that's between now and the 3rd of February. So a weekly cycle is about a 26-week, so half a year move. And so once again, we want to see a right translated of that. So past week number 13, current week is 19. So we've got a week 19, or rather last week, or this week, a week 19 high that is firmly in the second half. However, it's not crazy. This is a very relaxed general, like $108,000. I mean, that's great. That would have sounded crazy back here, but no one's really frothing at the mouth over it. People aren't losing their goddamn minds over Bitcoin at the moment. There is really healthy ETF inflows, but retail is not spazzing out. So whilst this could be our cycle top, it isn't really accompanied by a big sense of mania. So it feels like it probably is not. So we should just get some sort of correction down, in which case I would then be looking for the Trump inauguration, because this would be day sort of 12 to 17 of the next 60-day cycle, which would be a very logical spot for a top. You can see how there'd be a buy the rumor, sell the news kind of thing happening. So maybe around then we might look for, if we get this huge punch up, and I've said the last couple of weeks, if we get a huge punch up into sort of the $130,000 region, which from here is big, a 30% correction from there just takes us straight back to where we are today. So in the grand scheme of things, nothing crazy, but I would consider that to be a bit overblown. So let's run through these notes. So weekly cycle top between now and 3rd of Feb. So we're waiting for a sort of short-term macro top. This is not the final market top by any stretch, but frequently you have these 6-monthly patterns where Bitcoin will have a 25 to 30% retracement on the way up. So for some people who are very much in profit, it might be a good opportunity there to shave a bit off. And you can always reallocate at the bottom of that drop. So Yes, that's coming up. So I'm expecting if we got to 130, 134,000, maybe even 128 to 134, that would convince me that we have a weekly cycle top. But if we're at like $115,000, I'm probably just going to stay in position as I have been. And the long-term thesis of a top in the second half of next year still intact. So Bitcoin, when you zoom out, like we are still well and truly up high in the range, consistent higher bottoms forming. Life's looking good. Life's looking good. At this stage, we are expecting sort of another two, like maybe even 2 weeks down or sideways or something. I mean, if Bitcoin was to even just go down to $94,000, that's really not that crazy. So it's looking good, right? Translated, very positive, beautiful. So anyone who thinks Bitcoin is in dire straits is just a bit like, just take a chill pill. Life's good. I want to touch on Ethereum because, hey, it's had a really nice bit of a run. So a 74% gain over a similar time. It's now stuck itself in this lovely defined trading range. So we've had a strong move November, December, buying on a weekly close above this, a couple of points above. So 4140 is sort of my level. Extremely high probability you'll make money because if it was to go up here and close, that means it wants to continue up. In the same way, if we were to lose this number down here, somewhere about 3,500, that would be a high probability that it's going to go down. So then we want to short. So in terms of Ethereum, it has finally done something. It consistently had another low to Bitcoin. It would have big volume on that low. It would look like this is it. It's going to reverse. And then it continued down again. And then it would look like this is it. It's going to reverse. And then it continued down again. And so that was part of our thesis as to why Ethereum is just underperforming. Because whilst it has made a 74% gain, which is great, it is still 24% off the all-time high. Whereas many other cryptos, such as Solana, have already exceeded those all-time highs. So that's great. But, I mean, Bitcoin did 62% and 74% is really not that much more. I would have liked to see Ethereum fly up to its all-time highs. And it has had the benefit of, like, the ETF effect because now those are coming out. So the traditional markets are just buying that so that they can promote it. Because at this stage, it doesn't really matter what Ethereum does. It just matters, can they make money off it? If they can, they'll put it into an ETF. And that's why we will see next year just ridiculous things in ETFs, just random cryptos being thrown in because they know people will buy them because they don't have no idea. They just see crypto going up. Let's just buy this ETF. So Ethereum's doing well at this moment, trading range. So there's no point to buy, no point to sell. You're going to have to wait and see where it's at in the coming weeks. But it's done well. And if you're in it, there's sort of no point selling or buying at the moment. You can wait. If it comes down a little bit lower, you can buy and have a tight stop. That's always a good idea. The bottom of the range, because if it does break, you can just get out and you only suffer probably 0.5%, 1% kind of loss. So Ethereum's looking good. Solana, bang. I was excited to see this one. So 72.5% gain over the same period. So pretty much Ethereum and Solana have done the same thing, except Solana has breached the all-time high
since election day.
Since the 4th of November.
Wow.
So
it doesn't feel like it.
It doesn't feel like it, but that's exactly what it's done. I think it probably doesn't feel that way because it did top out a bit earlier and now it's had these runs down. And as soon as I saw this, I actually got quite excited because generally when something starts its run down, it will move down with 4 sort of clear drops. So we've got 1 drop, 2 drop, 3 drop, 4 drop. Beautiful. Lovely to see that because it doesn't go more than 4. If we come back up and we go for a 5th drop, that means it's just like get out because it is just going to fall like a stone. So at this stage, this is suggesting that we have established a low area for Solana. Perhaps we might come down here just a little bit lower, but we do have this sort of trading range that is defined between sort of 203 to 264. So it's actually looking really good. Notice that we got the all-time highs, we breached it, but we didn't close above it. So that's why. Always look at the close. The close is always like the extra bit of confirmation. So if you did buy up here, then don't sell down here, basically. Because if you went, all-time high, buy, and now you're sitting there going like, it's 20% down, 21%. Now is not the time to sell because we are right at the bottom of the range. If we were to get lower, then you can think about trimming if you got in too much. But this is looking like a low. And oftentimes when you feel like now's the time I have to sell because it's all over, that is the time when the low is in, and you selling actually makes that low. And so everyone else who buys from that point makes money. So that's why it's important to keep your emotions in check. Look at the macro, 72.5% gain over not even the 45 days. Like it did it in 18 days. Wild. So of course we need to kind of absorb that move. On the whole, Bitcoin could come down for a couple of weeks, or it could trend sideways, or it could have one more punch up. Either way, it seems like towards the end of the year, we're going to get a bit of a sideways chill motion. I think as more traditional finance comes into the space, people are going to be more susceptible to what traditional finance does. So right now, at the end of the year, they all go on holiday. Everyone goes on holiday. No one's sitting there racking their brains, staring at charts 24/7. They just chill out. So you see at the end of the year, it kind of just relaxes. People will be harvesting taxes and stuff before the end of financial year. I'll leave that to Steve to talk about, but it's all looking good. It might feel like, the last couple of weeks have been down, because in many ways they have. But, think of where we were at just a month ago. Life's bloody good. We are still making so much money, and we're nowhere near the top. So life's good. It's good. I saw this that just in the last day, and I bring this up because I went to this investor meeting with, I was invited along to go to this investor meeting with some high net worth investors, and it was doing a presentation. We had Alan Oster, who's the chief economist for the National Bank, the National Australian Bank. So he's one of the sort of like the top 10 people in finance in Australia. And he was up there saying like, look at my models, look at all my models, they're all great. And then they would, in COVID, it would all fuck up. And he'd say, yeah, but like, look at how good it was for like the decades previously. Look at my great model. And I'm going, dude, like, I'm only interested in what's happening in the next 12 months. And you're showing me what's happening in like 1952. And he was sitting there going, well, Australian dollar is currently at 69 cents. So 69 US cents by one Australian dollar. And he goes, it should be at 75 cents. Well, why isn't it? I don't know. We don't know why it isn't, but it just isn't. And if Trump comes in and he puts like 20% tariffs on, we'll be fine. If he comes in and puts 200% tariffs on, we could drop all the way to 64 cents. But that will be it. That's the lowest. Anyways, we haven't even had Trump come into office, and we're already at 62 cents. So it shows you that even the people who are like right dialed in, like the National Australian Bank do the most consultation out of any bank. They have a zillion-ass surveys. The government literally like gets the data from them to publish the numbers. They are right into it. They cannot have any more information. Yet they still don't really, they're still not right 100% of the time. People still don't know what's going on. So it's good for me because all my investments are in US dollars and crypto. So that's nice. In the last 2 months, that's just an extra 10% since September that, my things. So that's good. So for your Australian peeps, hopefully you too have your investments not just sitting in cash. So yeah, it's all kind of happening. Something else they mentioned was that manufacturing economies have just been absolutely like demolished. So that is China, that is Germany, that is Japan and Canada. Surprisingly, the US has actually been going really, really well. They grew 3% in the last 12 months. Australia has grown 0.8%, which is absolutely terrible. So I'm currently living in Victoria, which is ranked last now out of every single meaningful metric in the country. So it's a terrible time for private enterprise, but the government is just spending. They've got so many infrastructure projects. They can prop it all up by borrowing. Our state has about $188 billion of debt and rising. So it's really like, you can see how the Ponzi can keep going because the government can keep borrowing money, but eventually that'll stop. We've already run out of money. But once they can't borrow anymore, that's when everything falls to pieces. So that shouldn't be for a little bit longer. That shouldn't, that sort of falling over will actually cause all of our crypto markets to go up. So in a way, it's terrible for my country, but it's quite good for me personally. And yeah, that's kind of the roundup. We're looking good. It feels worse than it is. We're actually really, really positive.
it definitely feels worse because there's so much like people just dying on the streets. Welcome aboard, Lou. How you doing, buddy? Oh, you're muted there. Yeah, click the unmute button.
Okay, cool. There you go. Yeah, yeah. Didn't want to, interrupt the analysis, but
No,
I'm right there with you, man. Like, even as someone who bought low, sold the top before the crazy dip, I'm still down somehow because I bought the support and then it goes down even more. It's like, it's a tough game, man. It's a tough game. But yeah, I have mixed feelings right now. I have a lot of mixed feelings.
You're dialed in a different way. Go ahead and just give us your thoughts on what's going on with the market and everything so far.
Yeah, like I did just see one. I think the guy's name is Ben Cohen. He is into the cryptoverse, and I watched his long ass technical video, and he was saying how if it's what was a right tail end or a left tail end cycle, and it would either be in Q4 of 2025, that should be the end, or it should be it could be potentially Q1 2025. But like the fact we're not even there yet, so that is like
25. That's next month.
Whether it's left end or right end, whether you say the top was in 2021 in May or November. So a lot of factors are pointing towards November, Q5, and then but there are some things that are pointing towards early, like Q1 2025. But then it's like I'm seeing things right now. I look at a lot of different factors, and there's almost everything is still saying that we have room to grow. So that's positive. And I think the majority of my feelings are probably just because like we're literally in the thick and thin of it like right now at this very moment. But I was looking at the charts and also talking to and listening to some other analysis. And if you look at the weekly chart on like a few coins, even like Solana, it's like been going down, but like if you look at the weekly chart, it's literally just made a higher high, and now it's retracing from that higher high. Same thing with Bitcoin. Like it had this huge consolidation period for months and months and months. It broke out, went up a shit ton, and then now it's having a retracement. And actually, it's funny because like there's a technical analysis, like old school technical analysis, where you basically take the flag. It's like a bull flag, and the way to measure it is to take a rectangular tool and measure it from the bottom to the top, and then put that on where the breakout is. And it actually got exactly to the level of where that like technically was going to be, and started to drop. So it's like I don't know why it feels so bad right now when technically Bitcoin's still like doing fine. Solana is just making retracement. Like a lot of these coins are just making retracement. I think it's because a lot of the coins that we're in, or that a lot of people are in, are down tremendously. Like way, 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 way more than just, Bitcoin or a few of the majors and stuff. And so like their charts look different. And so yeah, that's what I'm looking at. And I'm trying to change my strategy a little bit, or like think of a better way to trade, where at first over the last few weeks I was looking at things like, okay, look at when everything drops, look what has held up the best, and has dropped the least, because then on the rebound, they should go up the most. So that's one way I'm looking at trading also. But then also, I realized that a lot of the biggest gains come from, buying legitimate projects or good projects or narratives before they happen and then holding. And I've seen it with you, I've seen it with so many other people. It's like the people who make the most gains are the ones who hold through 40, 50, 60, 70, even 80% drops,
Yeah.
So it totally depends. Like, if you're the viewer watching this and if you're a trader, it's like it totally depends on what is the style that you're trying to trade or invest. Are you, because essentially, like, what I've seen is that the biggest gains do require or usually come with massive drawdowns, and it's like we should not be at the top, right? We're most likely not at the top. So if you're okay with holding, then you should be okay. But like I said, like, I'm thinking of different ways to trade now. So that was one way, and then the other way is thinking of what's the narrative, because I was also thinking of the best plays that I've done, and two of the best plays that I've done, one was in memes and one was in AI. And the memes were like before they went crazy, and then like while they were sort of going crazy, I hit it out of the park with one and pulled like a 30x, and I made like life-changing money with that. And then my other
That
one
was
was
KeyCat,
with
right?
KeyCat. Yeah, that was KeyCat.
KeyCat when you were here in Manila.
That was when I was in Manila, yeah. Pulled like a 60x or something, and I went in like super heavy with it. So I got super lucky with that. And then the other one was like my AI plays. So there was a couple of them. The first one was Tau, and that was just like strictly an AI play. And that was when the AI narrative was coming around, and ChatGPT was getting really popular, and all the AI coins were going up. And now the latest one was this thing called Opus, which is an autonomous AI coin, which ended up doing really well. Did like a 10 or did a 20x or something like that. So the way that I want to start thinking, like way more so than just strictly technicals, is like, what is the next thing, or what is a possible next narrative that could come up? And so and two things, like, one, when I was thinking about this, was really bad in that, like, the fact that I think that the best narrative for the crypto market in general is what just happened, which was that Trump was elected, the most pro crypto president ever in history. Plus, he elected all of these pro crypto people. If that didn't jumpstart the rally of the bull market, of the altcoin market, then I simply don't know what will. I don't think, and because of that, I don't think that we're going to have a traditional altcoin market where the rising tide floats all ships, because the people, typically the market goes like Bitcoin, and then high market cap coins, and then altcoins, right? And trickles down. But this cycle, we have the ETFs, and the people and the institutions that are buying the ETFs, they're not selling their Bitcoin to trickle down into the smaller coins. So you have to be way more selective and way more in the know, or just be an idiot and go into fart coin and the stupidest named coins out there, because they tend to do the best. But like you have, like,
I feel personally attacked on that one.
It requires a lot more. And I noticed this in 2021 too. Like in 2017, you could throw a dart at the wall, anything and everything went up hundreds and hundreds, thousands of percent, really. Everything did. It was so easy. In 2021, it was a lot more difficult compared to 2017 and 2018. In 2021, yeah, it was like easy. It was easier than, like, it wasn't too difficult, but it was still fairly hard compared to 2017. And this cycle, obviously, I've been way harder, like, because we have so many coins now, so there's such a factor of dilution.
So
So
I don't think there's going to be a traditional altcoin season because listen, Do you remember how many cryptos there were last fucking quarter, last full run?
Yeah, there were a few thousand cryptos, and now
No,
there's hundreds of thousands.
1,600, mate. It was 1,600 last
Oh,
month.
well,
And now we're at 2.5 million.
oh
You know?
my God, yeah. So
I don't think
you
alt
have
season's
to be
happening again.
selective.
I
No,
don't
the
think
alt season,
season's
like
happening
people
again.
think, it's
It's
not.
over.
It's not
It's
the
not
way
happening,
that
no.
people. The only thing that's going to happen, and this is the other thing, the good part of what I was thinking about with the narratives is that there still are going to be, or there still should be opportunities that I could see happening in the future. So the first one is the AI, because obviously we have the new ChatGPT that's going to be coming out, and AI is here to stay. I mean, it's going to get bigger and bigger and bigger every year, and there's going to be more mindshare into the AI. So that's number one. And the other one that I was thinking of was real world assets, the RWAs. When if Larry Fink from BlackRock, he's already mentioned this before, that he wants to tokenize everything, right? So I think when that starts becoming more in the mainstream conscious, or when he starts going out and that whole type of tokenization of real world assets becomes more of a mainstream thing, and then that can really spark off some of the RWA tokens like Ondo and some of the other ones, Rio, et cetera, et cetera. So that's what I'm thinking is like, you need to think about like what could possibly happen in the future, because we just had the alt season, like we had it, like that. I feel like that, like
That was
what
alt
just
season,
happened last,
motherfucker.
that was it, because how can you like really think about alt season that most people think about? They think about alt season is like when retail comes in, and it's like, what just pumped? Like Tron, XRP, Lane, like coins that, like, what was it, ADA, like coins that were legacy coins that like normies know about. Like it wasn't like the coins that crypto Twitter has been talking about, you know? It was like, yeah, some of them did, but like for the most part, it was just like legacy coins. So that was probably alt season, like in terms of what people typically think. But I do think we're gonna have some more obviously like more opportunity. Like it's not going to zero, you know. It's not just like that was it and now everything's going to go down and like we're all screwed. I still think Solana could go to for maybe $500, you know, and we could see Ethereum at 5,000 and Bitcoin at 150, 200, maybe even 200,000. So it's like there's still definitely room to run, and I am praying that I am wrong on this. You know, I'm praying that I'm wrong on this, but like I'm just wondering when you don't know when the next narrative is gonna come out until like you start hearing things like, and you have that buy the rumor, sell the news type of event that you know is going to happen. Like we knew like the presidency was going in November 6th was going to be, or November 4th was going to be a huge event, because, and like that was going to spark a rally because we knew what was going to happen during that time, right? Same thing with like the ETFs. Even before, like we knew that ETFs were coming, and it rallied super hard into the ETFs, and then it crashed. And typically in January we have a 30% correction, and so, but like we're having the correction. It seems like we're having the correction early this year. Like everything's sort of been coming early. You know, it's like Bitcoin was all-time highs before the halving this cycle. So I'm hoping that like the correction that normally happens during the inauguration period is like happening now, and then we start going up, and we don't have that during January 20th, which is what typically happens because it's like a buy the rumor, sell the news type of event. But like I think the best thing you could do is like, one, think of the narratives, and two, play level to level if you're a trader, and three, think of, you know, you have to have like a system, you know, like whether that's looking for the coins that perform the best on the dips, and going into those, or thinking, oh, the another play that I do think also has a lot of potential is the base ecosystem. because I think that Brian Armstrong and Coinbase being the number one, crypto exchange in America, they're talking with Trump. I do think there's a potential for that to really, really pop off. Luckily, I did get lucky with that one. I got Ski Mask Nog, and I think Ski Mask Nog is going to be like the meme coin, the dog meme coin on base chain. So yeah, I think there's a lot of plays on there, and I'm hoping that there's going to be like at least somewhat of a flight to utility, like eventually, whenever the basically the RWA stuff happens. I just don't know when that's going to happen, but yeah, you have to think. You really have to think, because you can't just buy anything and have it go up. Like I had a portfolio for doing that, and it's not doing well.
It just there's a lot going on right now. There's a lot to analyze. I'm still on the fence about if Solana is going to go to $1,000, but there's just so much chaos out there. So it's good to sit down and talk with everybody and get like a based, perspective on things. Thank you so much, Lou. We're going to jump to Steve. Steve has a lot to go with the traditional finance markets. He works at a research investment firm right now, so he's got fresh data right off the press. Steve, go ahead.
Can you go over the S&P too?
Oh, sure, I can do that. But, the main thing that I want to go ahead and cover today, and with the major sort of crash that we've seen in the S&P and in the Dow, is right now markets are depricing in having an expected 4 basis point cuts or 4 rate cuts for 2025, as the Fed officials came out and said that they are expecting only 2. Now, if you listened in last stream, I did specifically say that for 2025, it's likely going to be between 2 to 4 rate cuts on the table. So this is still within thesis. No reason to panic. No reason to be worried whatsoever. John is joining me. So my issue with this, however, is that based off the jobs data that we saw in the summer, in the fall as well, that is not enough grounds to just go ahead and say that mission accomplished, the American economy is in safe hands. We can just go ahead and roll around with 2 rate cuts for 2025. It's the equivalent of the Federal Reserve saying, oh, I got a C+ for my midterm, so I don't need to go ahead and study for the final. No, we need to go ahead and have more support for jobs in the American economy. Based off the revisions we saw for Q2, we saw little to no growths in the jobs market there. My worry moving forward in 2025 is that we're going to see some negative jobs report. It creates a panic in the markets, and then the Federal Reserve is caught flat-footed and they're doing emergency rate cuts, creating panic. However, that would be something that would come mid to later 2025 and would not be something on the table right now to be worrying about for Q1, bare minimum. Now, in other news and in other important things to cover, in Europe right now, particularly in Switzerland, deflation is accelerating too rapidly and the economy is moving too slowly, and they're beginning to worry about negative growth, especially with deceleration that we're seeing particularly in Germany. So recently, the Swiss central bank cut rates by 50 basis points, and this will likely also be a bellwether for the greater European economy due to how tied in it is with the greater Eurozone. So we can go ahead and also expect a dovish position from the European Central Bank as well. And this will also provide stimulus towards assets, towards equities, and then at the end towards crypto. We are also seeing this deflation revamping up in Canada. So Canada is also taking on a dovish position. Recently, Chinese officials also met last week, and one of the policy guidance that they gave was to go ahead and cut their own central banks' rate cuts as well. Throughout the world, we're seeing a slowdown in economies. We're seeing a slowdown in, in inflation. And now the greater world economy is beginning to worry about deflation. So they're all heading towards rate cuts, spare edge cases like Russia and Japan and so on. So for these reasons, this will be a huge windfall for cryptocurrency. And this is why I'm still ultimately maintaining a bullish position for 2025. One worry, however, or a second worry that I should go ahead and outline is if we look at greater oil demand for 2025, usually very bullish, usually very aggressive in their predictions. OPEC outlined a 27% decrease in global oil demand, which means that the global economy is fundamentally slowing. If asset prices and if crypto prices get way out of control, if the stock market gets way out of control due to everybody cutting rates at once, including the Federal Reserve, because you have to remember, 2 rate cuts are still, that is still a dovish position. They're just going at a slower rate. If all these asset prices take off and there's not the economic growth underlying to justify it, and if there's a surprise jobs miss in the United States or surprise unemployment uptick in the United States, this could lead to a market panic. However, again, I want to reiterate, based off of the jobs data that we saw this November and October, this is not likely to happen for Q1 or Q2, so we are safe there. However, I will be watching the data very closely moving forward into Q3 and Q4. So stay tuned. We can't just always be these permabulls constantly being, oh yeah, everything's fine, living on copium, this isn't, Charlie's show or whatever the fuck. So, we just got to keep it real here, right, guys? So I'm saying we're safe. This current market sell-off is simply the futures markets depricing in the expectation for 4 and 3 rate cuts because the futures markets got ahead of itself with their expectation for rate cuts. So this current sell-off that you're seeing is simply the depricing of 4 rate cuts. This isn't something to panic about. My personal worry is actually 2 rate cuts not being aggressive enough to keep the support going for the American economy moving forward into the long term in Q3 and Q4 2025. That's where my worry stems from. That's my main update today. Yeah.
Good stuff. Let me unmute myself there. Okay, good. All right, buddy. Appreciate you there. James, let's just wrap it up with you. Give us a final take on everything, because we just want to give everybody a saber take. You're the TradFi guy. You've been in this game for forever. Just break it down for us, because a lot of people's hopes and dreams lie on your every word, my friend.
Like you said, John, let's kind of take all the data and all the information we talked about just now and just condense it down to the simplest form, right? So let me kind of share my screen and let's look at a few of the, let me see here. Entire screen. Okay. Let me see. Hold on. Okay. Give me 1 second, right, guys? Let me try to share my screen here. Give me 1 second.
Somebody says Pump.phone owner is Jewish and dumping hundreds of millions worth of SOL he's making from the fees. If it wasn't for him, Solana would be at 400 right now. Well, if Solana were, so let me show you guys how to fact check this when you hear stuff like that. Okay. So you go to compare market cap. What would Solana be? $400. So it would need to be a $200 billion market cap asset. So Pump.fund has only made $380 million. That's not even 1 billion. You would need, assuming you rounded that 384 million up to 1 billion, you'd still need 99 billion more dollars to flood into Solana for the price to be 400. So unfortunately, that's not the case. I wish it was that simple. They are starting to ban Pump.fund in certain countries, like the UK, I believe, banned it permanently. James, you there, buddy?
Yeah, hold on. Technical difficulty here, guys. Give me 1 second.
You're good. Yeah, but I wish it was that simple. But the guy running Pump.fund.
Can you guys see the screen?
Oh yeah, here we go. Go ahead, buddy. There you go.
Okay, so let's put things in perspective, right? 1 year ago, total crypto market cap was at $1.7 trillion. Currently, we're at $3.4 trillion, which means the market cap has doubled from a year ago. So little bit of pullback is not only normal, but it's actually healthy, like we were saying, right? So let's look at the other screen here. Hold on. Okay. One thing that I would like to keep or remind you guys is that market trades based on the expectation, not what's happening now, but what the market think it will happen in the future, right? So if you look at the CNBC headline here, Fed cuts rate by a quarter point, which market knew it was going to happen. So it was already baked in, but indicates a fewer reduction ahead. So the problem, one of the pullback, the reason for the pullback is that market was expecting, like, Steve was saying, 3, 4, 5 cuts next year. But the Fed yesterday said, oh, no, there'll be only probably 2 cuts in 2025, right?
Just 2?
That's why I want to. What? Go ahead.
He said just 2 in 2025?
Yeah, that's what they said.
These bastards raised it every fucking month in 2022.
Yeah, so I think one of the reasons is that here is like, okay, I got this stupid computer here. Let me share screen again.
No worries. Guys, be sure to comment. If you're watching on the replay, let us know your thoughts on the show. We need as much viewer data as possible.
Yep. Okay, so here, this is actually from stlouisfed.org. It's their official website. The Federal Reserve actually has 2 goals, 2 mandates: maximum employment and price stability. So what they've been focusing on since Biden took the office is this second part, right? Try to get the inflation under control and bring the price down, or try to make the price stable. Well, what they've been kind of neglecting on is this first part here, maximum employment. Because, with all the jobs number they've been feeding us, now they've been all revised down, right?
Q2 jobs were a lie of last year. Fucking lie.
Look at this. This is just in August. 800,000 jobs that were made up, right? So they revised that down.
God damn.
So it's all been just what people tend to look at is that they only look at when the news comes out, but they really don't look at what gets revised later down the road, right? So I think that, like Steve was saying, that 2 cuts they said they're going to do next year. I think it will be probably end up being more, because they're not looking at the jobs. They're just looking at inflation right now. And they've been relying on this faulty jobs number where it gets revised every quarter after the new number comes out. Then it gets revised down for hundreds of thousands of jobs. So the problem, I think, is that what goes back to what we're saying, is that they are reactive more than proactive, right? So it might be that jobs market for US might be in the dumpster before they do something and actually start cutting more rates. But as of now, they're not looking at this number. They're just looking at inflation, saying that, hey, we still think that we got inflation under control. Maybe 2 more cuts, right?
Interesting. Well, hold on, Steve. I don't know why I get an echo. Anyways, well, the biggest thing is we've got to just stay sober right now during this time, because it's just basically a healthy retracement, as Alex was saying, and a lot of the guys here have been saying, and I was kind of saying it too, just say, like, look, guys, like, the reality is Bitcoin, like, how long did we fucking hang out in 80K range? We just blew right through it.
Yeah, over 6 months.
Yeah. No, 80K range.
Oh, 80K. Oh, sorry. Yeah, no. Yeah, it was like a whole bunch of build up and then just boom. Yeah, a couple of weeks.
Flew right fucking through it. Yeah, go ahead, Steve. Update.
Yeah. Louis also asked me about activity in the S&P 500. So going on earlier, there was the depricing of an expectation for 3 or 4 rate cuts. But adding on to that, much of the growth in the S&P recently has come from companies like Tesla. Tesla gets much more growth from lower rates, one, because that helps tech companies, but two, automakers as well. When rates go lower, people can go and finance their cars at a much cheaper rate. So if they can no longer finance their new car purchases at a cheaper rate, that means that the companies like Tesla is going to be hurt. Other tech companies and the Mag 7 in general have been leading gains in the S&P 500. So of course, rates not going lower fast enough is also going to go ahead and hurt the S&P 500 as well. Alex mentioned earlier as well on the show is that another thing that will be hurting equity values as well is, of course, people need to raise money for taxes since their tax bills will be coming due soon. So that's going to be 2 items that also hang on equities as well. However, I don't find these reasons to be big enough to be bearish in the mid to long term, just sort of short-term blips that are happening on the radar. One extra small update to give, that's all.
Good stuff, man. Oh, okay. I think we're gonna go out. Alex, did you want to share something?
It's just the chart for the S&P for the daily. Like even with that huge drop, it's still
no, it's okay because
So-
we gotta go. We gotta drive up to this fucking city. We got me, James, and Steven here. We're going to.
nice.
We're gonna go do some mission work here and spread the word of Christ in Angeles City. So that's going to do it for us today, guys. We'll be back here as normal. Me and Steve, we're checking into a penthouse. We'll be updating that live. Check me out on Instagram, Hot Dude Life. Follow me there. You can see our trip. We're going to be uploading vlogs and stuff. It's going to be a good time. But we got to get going. I got to check out. But anyways, don't worry too much about, panicking and the stream and all the market stuff. Really, it's not that much of a big deal. It's a healthy correction, much needed, quite frankly. Anything that keeps on going up's a red flag. So you don't want that. Until then, we'll see you guys later next week. Peace out.